Welcome to the Daily Update, where I'll go over the action in the market for Monday, April 24th, and then we'll see how things look for Tuesday, April 25th. Had a positive day, but the market chopped around a lot of the day. We ended up going positive right late in the day. We're still maintaining a positive backdrop. We're showing some real signs of struggling. The market just continues to look exhausted. There's not a lot of conviction. We have overhead resistance, but the market really can't push up above that. We have support, and still all of our charts are positive, so we're not really going down at this point. So we're just chopping around more or less sideways. Before I get going, please note that I am traveling as of right now. The sound is probably a lot different, although I hope the video still looks the same. I do have a podcast that you're welcome to check out on YouTube, and both in the description for the YouTube video as well as the podcast, where you can download all the slides and charts to look at as I'm going through them if you find that helpful. I do have a private Facebook group, and this is one new idea that I'm giving a try. Instead of going through all the Isabel net charts and the other charts that I bring up that's making the video even longer, I'm going to go ahead and start posting this in the Facebook group. I've already been doing that. Those of you that are already members of that group are already seeing those posts that I'm making. If you want to see those, send me an invitation on Facebook. I can add you to the group, and then you can follow along with some of the other charts. What I'm trying to do right now is focus more on just my charts that I go through in the analysis. Now, if there's another chart that I get from another place and that really helps us, fine, then we'll use that. But just on a day in and day out basis for informational purposes, I'm going to try posting them in the Facebook group. Now that brings up another point. There are other platforms that I could post to. I have a blog at SPXInvestingblog.com. I could easily create a page and start posting things there if you don't want to belong to the Facebook group. I do post on Twitter just when I have a video that has been uploaded, but I could start posting some other things there as well. And then the other social media platforms like Instagram, LinkedIn, Blogger, those are the ones that I post to right now, except for Instagram. I don't post right there. There's another thing called Goo. There's Tumblr. I could send you an email. There's Kakao. There's Reddit, OKRU, Pinterest, Skyrock Mix. And if there's any other social media platform that you use that you would like me to add and then start posting to that, let me know. Some of these I've never used, so I don't know if they're very helpful or not, but I'm willing to be flexible with that. I'd like to post everything in the Facebook group, but if one of these other platforms will work for you, please give me some feedback on that. And then there is a new poll that's been posted. Some of you have already started to vote on that. So going back and looking at where we ended last week, 50% said we would be lower, 50% said about the same. We were just about the same. And then looking at 2 weeks on May 1st, where do you think we will be? 50% say higher, 38% lower, 13% about the same. Do you think we will enter a recession? 80% say in 2023, 10% say that we will enter in 2024, and then the banking crisis, pretty much everybody agrees that there's more that could come out, especially if the Fed continues to raise interest rates, and that puts a lot of these banks in a really dangerous situation. All right, let's go back and talk about what happened at the open. We just had a higher open. Prices almost got up to R1 at 41.43. Then we fell down below the unchanged level and then down to the daily pivot at 41.28. Prices fell all the way down to S1 at 41.19 before they climbed back to the daily pivot and up to the unchanged level, which is that built-in support or resistance level that we can often hit. But then we did get above that just enough to close positive. We were up 0.09%, the same as on Friday. So not a real gangbuster move, but still positive nonetheless. On below average volume, we seem to be back to that old trick again after options expiration came and went. The technicals, as I said, are positive, but looking tired. We have pretty significant overhead resistance, so we'll just have to see if the market is capable of trying to break on through to the other side, so to speak. Inflation and interest rates are the name of the game. We have some big reports coming out later in the week, and so trading might be subdued ahead of that. Earnings season is now happening right now, and that's on a business-by-business basis. Any Fed speak that we may get, and then any more banking information that we may get. Here's the intraday chart showing how we did have a positive open. We went almost up to R1 before falling back below the unchanged level, the daily pivot, all the way down to S1. We bounced up above the daily pivot, got back to the unchanged level, fell back, and then we're able to close positive on the day. Value continues to outperform growth, especially in the large caps. And here's the closing basis where growth did have a pretty good day. It was up more than value. And with the mid caps, growth did outperform. And with the small caps, it actually underperformed. Looking at the 10-minute SPY chart where we were pretty much flat, and then we hit the pre-market session and took things a lot lower. We clawed our way back to go above the unchanged level, tried to spike up after the open, fell back down, clawed our way back, and then ended up being little changed on the day. What are some comments that we can make? The NASDAQ and NASDAQ 100 did decline. We're seeing if they can break out at all, especially the NASDAQ above that double or possible triple top. The S&P may be beginning to shift negative. That's kind of what happens with a lot of our indicators. If we don't see a lot of upward movement, they tend to switch over negative. Of course, the inverse of that is also true when we're going down. On a short-term basis, only our stochastic chart is showing anything extreme. The dollar was down and interest rates were down, which probably helped save stocks from going negative on the day. The 30 to the 5 is back to being normal, where our other yield curves remain inverted. Sentiment is still positive at 66. It actually ticked up from 64. And our trend is positive, but it's weakening because the green line is coming down. But when you look at the ADX, it's still above that moving average. Now it's starting to look like it could roll over pretty quick, and I'll have a chart to show you. No matter what happens there, we're still below 20 overall, and I'm still keeping our bias and momentum at mixed. There were no economic reports that came out on Monday. There was a post from FactSet suggesting that companies in the S&P 500 are reporting a lower net profit margin for the 7th straight quarter. Here's a chart down below showing how it continues to drop off overall. Then getting into our charts, the Ultra Index ticked down just a little bit, showing there's just no fear right now in the market. And I have a longer term look at this chart to get some perspective. We're getting down to a pretty low level right now. We could still go lower than this, but a lot of times this will mark some kind of a top in the market if this indicator continues to fall. Here's the VIX, how it did tick up a little bit on the line chart and on the bar chart, but we closed pretty much near the low overall. The VIX of the VIX, after spiking up before options expiration, now seems to be coming back down. Here's the SKU index, which is not giving us any kind of an extreme reading, either positive or negative right now. Equity put call ratio really didn't change overall, so not really getting anything new there. One fear gauge that we look at continues to fall overall. Here's the other fear gauge. It turned up just a little bit, but it's still declining for the most part. Our other chart that we look at still suggests that investors are favoring a risk-off scenario instead of risk-on. Here's a look at the ADX. We're starting to roll over a little bit. We're still barely above the moving average. It's a little hard to read because the red line's mixed up right in there too. The green line is on top, but it is declining. However, everything is still below 20. The Arun, after giving us an extreme positive reading, is now starting to decline. Looking at the daily chart, nothing was really decided here. After trying to bounce up through this upper resistance and not even getting close to that, we've since been falling back overall. Even though we had an up day, we're starting to see a series of downward-looking bars. On the bottom, you can see where volume dropped to below average. We're watching this 20-period simple and exponential moving average, which are right about on top of each other. Will this provide support if we continue to fall? And you could round this up to the 4,100 level for support. The slope is now turning negative and starting to come down, and we're also starting to see some problems with the MACD. It's almost ready to roll over and go negative. Looking at all of our oscillators, here's the slope. The MACD is the third one down here. We're rolling over with the TSI, the PMO starting to roll over, the PPO. Longer term, we still have the TRIX and the KST that are positive, but they're starting to show some weakness. The PPO study, we're still positive in the long term, intermediate term, but we're starting to decline in the short term, even though we are still positive. Here's the stochastics. We've worn off the short-term reading as well as the intermediate term reading, but the longer term stochastic is still trying to roll over and is in extreme positive territory. The force index was pretty much flat, but still above zero. That's positive. We're still above all the plotted moving averages. The dots are still on top for the parabolic SAR. That's negative. And we're seeing this negative divergence where we did fall down based on price, but we actually dropped below zero based on volume. The vortex is still positive, but the green line's coming down as the red line's going up. The chicken oscillator continues to tick up. That's positive. The S&P to utilities ratio are just chopping sideways. In our PMO study, turning back up a little bit with the percent of PMOs that are rising. We're no longer extreme with the buy signals, and now we're starting to roll over with the PMOs that are above zero. Here's the PMO itself, starting to roll over, but is still positive based on price, also rolling over. This is something to watch, and sometimes this gives us a heads up a day or two ahead of time. The volume one is starting to turn over negative, even though the price one has not. What typically happens is these two cross, and then a day or two later, the PMO itself crosses. We're still hanging in there with the BPI. It's above 50, and for the most part, still advancing. The NYSE bullish percent index has turned down, but it's still above 50. The chicken money flow continues to be positive. The balance of power, and I added some extreme positive and negative lines on here. So we're positive even though we are declining. The TTM squeeze continues after giving an extreme positive reading, and I added some lines on this chart too, but we are declining. And the go, no go is still giving us a positive picture, but neutral. We're still above this red line, which is a triple exponential 50-period moving average. That still is hanging in there for support. Longer term, if we continue to fall, we're looking at the 40.75 level, looking at the anchored moving average going back to the all-time high. Looking at our fib levels, we're still above this 41.23 level. We're currently at 41.37, so 14 points above this support level. The next longer-term fib chart just shows how we had a really hard time getting through the 41.56 level, and this is providing overhead resistance. Longer term, if we continue to fall, we're still looking at the 40.20 level. Our quadrant chart is also showing that this is an area of pretty significant resistance. The equal weight index continues to underperform the S&P 500, and we're pretty much chopping sideways with that ratio between the equal weight and S&P 500 indexes. The Elder Impulse system remains at neutral for the S&P. With the McClellan oscillator, we're still above zero and turned back up slightly, so that's somewhat positive. But longer term, we're starting to see a divergence here, where the S&P was going up, making a series of higher highs, but the broader range McClellan oscillator calculated on the NYSE, it was not making a series of higher highs, so that's another negative divergence. Looking at the indicator itself, it's just barely positive since it went slightly above zero. The summation index based on price is continuing to advance where we've already turned down based on volume. That's also a negative divergence. The Heiken Ashi starting to put in a doji candle here after it had seen a lot of open candles. They're starting to turn dark. That is more negative. The new take on Dow theory, we're still above this blue line here that looked like we were going to break out, but we never even got back to the previous high. But looking down below at the NASDAQ, we never were able to get above this blue line, so that's also a negative divergence. The transports continue to underperform the Dow. Looking at new highs, new lows, they're hanging in there okay with the new highs, but we're not turning back up with our 5 period. We're continuing to go up slightly with our 10 period, so we're getting a bit of a mixed picture from this chart. The advanced decline line did show some improvement based on price, but we're also seeing a negative divergence here. We were up on price, we were sideways on volume. Longer term, we're also working off of a negative divergence. On the positive side, we're still above the moving average with both. The advanced decline line is still showing some pretty good strength for the NYSE, but longer term, when you take only common stock, where the advanced decline line based on price did make a higher low, but based on volume, it made a lower low. That could be longer term negative. And then here's another new chart that's kind of a variation of a chart that I showed in yesterday's video. I just decided to go in and create my own chart. It says price has been rising, but this is not confirmed by the 50 and 200 moving averages. The S&P has been going up, but we're not making a higher high with the 200-day moving average. And we're also seeing a negative divergence with the 50-period moving average. In a good, healthy environment, As the S&P is breaking out, we want to see the 250 also breaking out, and they're not doing that. Another newer chart is the NYSE cumulative advanced decline line. We're also seeing a negative divergence here, where we came up almost to the previous high based on price, but we didn't even get close to that with the cumulative advanced decline line. And then just looking at the advanced decline line, we did not come up to that high either. So we're seeing a lot of negative divergence right now. The advanced decline ratio continues to be positive, and it turned back up slightly. The accumulation distribution is still looking healthy. Volume is picking back up a little bit. The money flow ticking down, but still above 50. That's positive. Ultimate oscillator also above 50, but it did decline. On balance volume is still above an advancing moving average. Special K, this is much longer term, and we're starting to see a cross here. That could be longer term positive. The financials showed a little bit more weakness, and the regional banking sector is also continuing to show weakness when compared to the financial sector. Looking at our advanced decline line study of the NYSE, we're pretty much flat, but still above the moving average. Ticked up slightly with the S&P, flat to slightly down with the mid caps, and still showing weakness with the small caps. The Dow still is not able to break above this monthly pivot level. The diamonds remain at neutral. The Nasdaq is also chopping around and had a down day. Nasdaq 100 also chopping around and declined. The Elder Impulse system for the Qs is now switched to negative. We're still above this 12,864 level with the Nasdaq 100. We're about 100 points above it right now. So if we start to fall with the Nasdaq 100, we'll be watching that level. We're still above this anchored moving average going back to the all-time high with our Qs. The micro caps were down but did not set a new 52-week low. The small caps were virtually unchanged on the day, and if this keeps going, we might see a death cross. Here's the Russell 2000. We're still above 50 with the RSI. The MACD is still positive, but we cannot break through this 200-day moving average. The small caps continue to be negative. The small cap ratio has really been underperforming the S&P. The mid caps are also bouncing along this pivot level that they just can't seem to break through. On the positive side, we're still above the 200-day moving average. On the negative side, we're below the 50-period moving average. And the longer we stay below this, we might get to a death cross with this index as well. The mid caps continue to be neutral. Looking at the home builders, we're down a little bit with the home builders ETF. The ratio ticked down a little bit, but they're still having a really strong correlated relationship between the home builders and the S&P. Yields were down slightly and actually closed below the 200-day moving average. We could be getting ready to see a golden cross with the shorter-term bond ETF. Not really seeing all that much in the MOVE index compared to the VIX, so their correlated relationship is still very strong. And then comparing the S&P 500 to the TLT long-term bond ETF, the gap is filling up just a little bit here. I added 2 new sections down below, but over the long period, the long-term bond and the S&P have a very strong correlated relationship. Right now, they're going in inverse directions. We're looking at this spread between the S&P and the TLT. These are just inverted from each other. The S&P minus the TLT spread, and then the TLT minus the S&P spread. MACD continues to go up. If we do see some weakness, we'll be keeping an eye on that. An update of our possible positive scenarios. We're still looking good with the 10-day average of the S&P highs minus the lows. When we look at the broad range of the 5-period moving average of the highs minus the lows, we continue to be negative. The Qs are really starting to underperform the S&P. We did see a bit of a bounce back up with discretionary to the S&P. A little bit of weakness between large cap growth and large cap value. Here's our growth to value ratios. A little bit of weakness, a little bit of strength with the mid caps, and a little bit of strength with the small caps. Looking at our 50-period exponential moving average of the new highs minus the lows, we continue to be positive. This is much longer term. The indicator is still above 0. The longer it can stay above 0, the more positive that will look. Our treasury yield chopping around. We're still wondering if this spike and then fall can give some support to stocks. It already did that before. Now we're seeing if it can do it again. In our staples to S&P 500 ratio, we're starting to come up and taking out this spike. So we'll just be keeping an eye on this chart. Our outlook for Tuesday, we're still in the middle of earnings season. The technicals are positive, but they are showing some signs of weakness, and we're seeing some real negative divergences. We have the FHFA Housing Price Index coming out, the S&P Case-Shiller Home Price Index coming out, and new home sales. So it's pretty much a real estate kind of day. Then the whole list of geopolitical events, with the market continuing to be fixated on inflation and interest rates, any Fed speak that we may get, and then any more banking information that may come out. Looking at the Stock Traders Almanac statistics for the 25th of April, we tend to be positive with the Dow, up 61.9% of the time, neutral a little bit more than half the time with the S&P, where we're more negative with the NASDAQ. And then the month of April tends to be more positive overall as well. Here is the yearly shot to give us the positive backdrops that we've been working from. We're on the 16th trading day of the month, where we tend to be a little bit more positive in a pre-election year with the S&P. Our scenarios can't really go with the down one because the technicals remain positive, but there may be some weakness that is developing. It's hard to go with the up one right now because we're just not going anywhere. We're having such a hard time getting through that upper resistance. So we tend to default to the sideways trend. The ADX is still above the moving average, but could be in danger of rolling over. However, no matter what happens, we're still below 20. The green line is still on top, but it is declining. Our warning signs, volume is still below average. The advanced decline line negative divergence continues. The Swinland trading oscillator negative divergence continues, and volume has dropped below zero. That's one of the charts I pointed out. Volume for the PMO chart that we look at is crossing over negative, which I pointed out. The S&P may be starting to weaken overall. The VIX still is showing an awful lot of complacency. The S&P is underperforming utilities. The summation index based on volume has turned down and it continues to decline. The new highs, new lows are lagging. We want to see that 5-period turn back up. We're still in a risk-off posture, which means folks are favoring bonds over stocks. Small caps continue to underperform. The NASDAQ may be declining from a double, potential triple top. Earnings season is just on a stock-by-stock basis. Our conclusion, the S&P is positive, but it may be starting to weaken. Short term, we're showing some weakness. Intermediate term, maybe some weakness coming in. Long term, we're still positive as long as we stay above that 200-day simple moving average. We had a recent golden cross that is providing more of a positive backdrop. Thank you. I hope you found this helpful. I hope you have a really good day, and I will talk to you in the next video.